Now, the ECB has also told banks to freeze dividends until next year. That's an extension of the March move to halt payments at least until October. The ECB says its request has kept about 30 billion euros of capital in the euro area banking system. Now, joining us now for more is our banking reporter, Nicholas Comfort. Nicholas, first of all, thank you so much for joining us. But how much of a surprise is this? We also know that they will review this stance on buybacks and dividends in the fourth quarter.
Well, we had reported last week that they were leaning toward extending the ban. It's been a pretty tough debate on the ECB supervisory board on this one, because there are some banks in Europe who are doing very well and who have high capital levels, and so there are some board members of the ECB who say, well, shouldn't we be allowing these guys to pay dividends? And others say, no, it's simply too unclear that the situation around the economy, all these payment holidays on loans, it's so unclear we can't do this right now. We've got to keep the ban in place. So tough discussions, but yes, many investors had basically written off the whole year in terms of dividends, which is why you're not seeing such an impact in the stock market at the moment. Now, I mean, the question, though, is how does it change next year? And when do we go back to business as usual? I think it's pretty tough to keep this in place. The ECB doesn't have any legal power to keep this in place. They can go on a bank-by-bank basis. They can tell banks not to pay dividends. But there's a whole bunch of banks in Europe, and that's a lot of work to be doing as the supervisor.
So we know that BNP Paribas, Nick, in your great story, you lay it out saying they were lobbying to resume dividend payments. UBS had also hinted that they may return more capital to shareholders towards the end of the year. I mean, could there be a problem with compliance, or do they just kind of do what they're told, especially these big banks?
Well, I mean, they've got to differentiate on those two. So yes, BNP Paribas, as a big French bank, was going to promise one of the fattest payouts of European banks, and whether they comply, I think they'll probably have to. The ECB is saying it's a request, but it's a fist within a kid glove. I mean, they can force the banks if they need to. UBS, different kettle of fish, and that's where the problem lies. Because UBS is a Swiss bank, they don't come under ECB supervision. But then again, that creates a haves and have-not situation in Europe. I mean, between the banks who are under the ECB and can't pay dividends, and those under other supervisors who can go ahead and pay dividends, it certainly could make UBS be a more attractive prospect for some investors than a European bank who's not allowed to pay a dividend.